Hey everybody, Real Estate Ninja here. I hope you're doing well. We've got another big bank that's in trouble. And the reason why we know it's in trouble is because it's walking away from a large chunk of its business. Okay, now this bank is the 28th largest bank in the United States. And when you see a bank walk away from a certain segment of its business, that means there is less money to be made for the bank overall because it makes X amount over here, it makes X amount over here, it makes X amount over here. This is a very logical way of looking at what bank is coming next. Now, I did a video the other day about a bank that was, and actually I called when this one crashed. It was a smaller bank with the same name, very confusing. So first off, we're talking about Citizens Bank. And I did a video because I had an insider that emailed me and told me, hey, I work for a large mortgage company, Citizens Bank. We're talking about the large one, the 28th largest bank in the country, is one of our big providers of wholesale loans, mortgages. And I couldn't get a hold of my rep and got a hold of her a few hours later. She said, I have just been told that we are no longer doing wholesale, that we are wrapping that entire product up. We are no longer going to be doing wholesale mortgages. I'm going to explain what it is in a second. And then she said that person's email was gone, vaporware, within an hour. And so I did that story, but I also tied it to the Citizens Bank in Iowa that has just closed its doors, went into receivership. The FDIC got involved. And that was a bank that I knew about that was crashing a month beforehand and told you what week it was going to happen. I believe it was in August, but I did the video in July. And I knew the week it was going to crash, right? Okay, so but it takes a while, right? All the information came out exactly when I said, and then it just finally, I think, wrapped up and closed its doors officially, I don't know, a week and a half, 2 weeks ago. All right, so now I'm referring to the big Citizens Bank. I had some know-it-all go, you're not talking about that, you're referring to Iowa, and I was like, oh gosh, it was a two-part story. It's very confusing when you have different banks with the same name. So now we're gonna be talking about, I mean, I already was the other day because the official news came out. I gave all of you that information before it was news, right? So this story is out of housingwire.com, and it's entitled Citizens Bank to Exit the Wholesale Channel. Bank said it will continue to service all existing mortgages according to its current processes. Now, let me explain first. We're going to talk about what is a wholesale mortgage lender. And it's very important for you to understand this. And as you realize this is why I've been warning about this real estate crash that, very few people understand. And I teach about it. If you want, 80% off, links are down below, $199. We'll show you how to recognize all this stuff and get you into a place of how to prepare for this crash so you can actually take advantage of this. This will literally be like somebody told you in 2006, hey, would you like a roadmap of how to prepare for the 2008 housing crash so you can pick up all these homes that are going into foreclosure, forbearance, whatever. And so it's $199. So it's 80% off. Links are down below. All right, what is a wholesale mortgage lender? So this information comes out of Bankrate, and it says obtaining a mortgage, whether a purchase loan or refinance, and I'm going to get to this news story, but this is why it's really important, comes in two basic types of lenders, retail and wholesale. The difference is while retail lenders work directly with individuals, borrowers, wholesale mortgages lenders don't. Instead, they often partner with mortgage brokers who work with you to find the right loan, sometimes at a discounted rate, and prepare your application. So let me give a quick brief synopsis of this. So there are mortgage lenders, like you go into Bank of America, Citibank, things like that, and they can sell you, their mortgage specialists can sell you a myriad of products that their bank offers. All right. Whereas if you went to an independent wholesale or an independent retail mortgage broker, in any small town or big city, USA, they have multiple companies that they can work with. Okay. And so what they do is they work with wholesalers. So what happens is the broker comes in, they're licensed in the state that you're purchasing in, to be able to show you all these different loan products, take in your information, prepare the documents, the loan application, and then they shop it around for the best rate, okay? Hence the broker. So what we're talking about is the 28th largest bank. But again, I'm gonna go a little bit more in depth into what a wholesale mortgage lender is. So a wholesale mortgage lender is an institution that funds mortgages and offers them to third parties. So let me give you an example of that. A third party would be a great example, Fannie Mae, Freddie Mac, the government, right? FHA loans, think first-time home loans, They come with certain reporting requirements. So the bank, the wholesaler, let's say in this instance is Citizens Bank, is working with a local broker, and someone wants to go buy a first house. They have no idea this real estate crash is coming because they didn't buy the real estate crash course. I don't know what to tell them, but they buy it, right? And they, under certain, if they meet certain obligations or criteria, sorry, they can now qualify for, let's say, a government conforming loan. And so the broker would give this to the third party, and this, we're going to talk about Citizens Bank, 28th largest bank. They would go, okay, let's take this in. We're going to fund it. We're going to fund this loan. So the money now goes to the borrower to be able to buy the house. Then what they do is they do what's called selling paper. They go, okay, this borrower has X amount of credit, their credit score is X, so it's excellent credit score. All the ratios work within this certain parameter. Let's sell this loan now, this paper, to Fannie Mae or Freddie Mac, okay? Or to some other lender, right? Okay, so this is what they do. So they're a lending institution that funds mortgages and offers them to third parties, such as a bank, credit union, mortgage broker, or independent mortgage company or professional. Now, this is why there's a massive investigation right now with Freddie Mac. It's going to get bigger. And I did that story on this channel, about 2 weeks ago. You're going to see that all over the news by the end of the second quarter of 2024. All right? Because Freddie Mac has started to investigate and are tightening their requirements, their eyes on every single one of these loans, because there's reason to believe, and I'm going to tell you right now, it's true. A lot of the credit ratings, the credit worthiness, or certain other aspects of these borrowers were lied about, okay? This is exactly what happened with the mortgage-backed security crisis in 2006 and 2008. Now we have it happening again, all right? So this gets me excited, and this is why I have a smile on my face, is because I'm going to go buy a lot of homes in this crash. Let me know down below how many homes you plan on buying, and if you're getting ready for this, how many homes are you trying to buy and what type of homes? It's important for people to see this, that other people are getting ready for this, because you are part of one of the greatest secrets in wealth building, and that is wealth cycles, and especially real estate cycles. It's what I teach people. I talk about it on the course. I talk about it on the channel all the time, and that's free content. If you want it all condensed more to where you can grasp onto it and really see what's going on, then that's why you buy the course. It's $199. I used to consult with people about this and make them lots of money. And I'm like, well, let me make some of this available to people for super low prices so they can go check it out. But it's only going on for 1 year, and it's going to be ending December, 30th? Whatever the last day in December is. So now we know what is going on with these rates, okay, or what a wholesaler is. So now let's go back to the news story, and this is a big story. And this means the bank's in trouble, okay? Citizens Bank, the 28th largest bank in the country, the 28th largest U.S. mortgage lender, has decided to close its wholesale channel, which produced over $1 billion in volume in the first half of the year. So now when I say this bank's in trouble, this is why you know this. It's very easy. Anytime a bank has a certain amount of money stripped away from it, revenue, that's not good. That's trouble, right? But they're making the decision to do this. Why? Well, where there's smoke, there's fire. There is an investigation being opened up at the federal level showing that banks falsified information. Now, I'm not saying the Citizens Bank falsified information, but I'm going to tell you that in the next few months, you're going to find banks that did. Okay, so let's go into this story. So that's $1 billion in volume that they produce, that they're not getting fees for beginning interest rate, some interest coming in before they sell the loan, okay? So they say, after careful consideration, Citizens has made the difficult decision today to discontinue originations in the mortgage wholesale channel. This comes from Chase Grunlach, Senior Vice President and National Sales Director, said in letters sent to broker partners on Tuesday and reviewed by HousingWire. Okay, it's on housingwire.com. Again, I got a call from one of my insiders. They said this was before that email even went out. They said they weren't answering the phone, and we're trying to get loans through, right? It was a broker. Then they finally got a hold of the rep, and within a half an hour of that conversation, that person's email was shut down, which means their job is bye-bye. And they said also in that email they sent me that their rep was like, I just heard about this morning. And that's how banks do it. It is like nothing, nothing, nothing. And then suddenly, yeah, you're fired and we're closing down this branch, because they don't want anyone knowing ahead of time before the trigger's pulled, because they're going to lose business. Okay. Shares are going to sell off, things like that. All right. This is how these crashes happen. So a spokesperson for Citizen did not immediately reply to a request for comments. Go figure. Citizens was among the few large depository banks operating in retail, wholesale, and correspondent in the mortgage space in 2018 when it acquired Franklin American Mortgage. And that is actually, Franklin American is who my insider was working with, okay? In an interview, that's their wholesale arm. Just try. I don't know if I said that or not. It's weird when you're live. In an interview with Housing Wire in December of 2022, former head of mortgages, Sonu Matau, who transitioned to an executive position at Freddie Mac this year, explained that the retail channel served the bank's customers. The correspondent channel focused on building a healthy mortgage servicing rights portfolio. And you know what? While we're at it, let me explain what servicing is, because a lot of people don't understand that because of all the problems with Mr. Cooper. How do you like, are you part of Mr. Cooper? Were you not able to make your payment last week because of a glitch? It's more than a glitch. Loan servicing is interesting because so many people get angry when they take out a mortgage and then a few months later it's sold to another person. Okay, that's the, and then sometimes they say we've sold your mortgage, but we're still gonna be your servicer. All right, there are so many different aspects of mortgages that people don't understand, and they don't understand how these crashes happen. A servicer retains the rights to simply be able to have the framework of your mortgage. They have a copy of your mortgage. It's on file. It meets all these certain parameters. They take your payment, and then they take the payment, they take a fee out of that, and then they send the rest off to who now owns that debt. All right? So it's great, because it's actually horrible. I say that in sarcastically, because it seems like someone's taking little chunks of money out of the entire thing. Eventually what that does is it causes the person, you taking out the mortgage, to pay more in mortgage rates, right? Everything from servicing fees to insurance that you are forced to take out, but it doesn't benefit you. You're forced, if you put down a certain amount, to pay for insurance policies that cover the lender, not you, right, during default. So that's that right there, okay? So that's what they were talking about. The retail channel served the bank customers. The correspondent channel focused on building healthy servicing rights portfolio. And the bank wanted to be exposed to wholesale because it represented about 20% of the market. However, shrinking mortgage volume caused by high mortgage rates and a fiercer competition have challenged the bank's strategy. It's really interesting that they've decided to pull out of the market right as a federal investigation is starting with Freddie Mac. I hope you guys see where I'm putting all of this together, okay? I think it's a big deal. If it's a big deal, if you agree and you understand what I'm dropping off, if you're picking it up, type a big old 10-4. 10-4 good, buddy. Come on, easy down there, big shifter. This is exciting stuff. Now, meanwhile, wholesale production was smaller at 1.1 billion from January to June, down 65% year over year. It was enough to make the 10th largest wholesale lender in the country per IMF data. That's a big deal. So think about this. Citizens Bank now has exited one portion of mortgage origination, servicing, whatever, mortgages. That means that much revenue is gone. That means Citizens is in trouble. And I'm telling you, I'm not saying like trouble like they're closing down, right? But every time a bank has to exit one thing, it's because something went bad. It's not because everything was going good. Something's bad, okay? See here. In a letter sent to a broker partner that Housing Wire received, Citizens, and I came out with this story a couple days ago. Thank you to my insider, Jill. Jack and Jill? Jill? Jack? I don't know who it was. I came up with these names because I want to give you like a name of someone that could be anyone. So it's actually not their name. But my point being is that I think it's important for people to understand this because, or I should just start using John Doe. John Doe is better than Jack or Jill. John Doe, Jane Doe, they gave me this information prior to any of this happening. And they wanted to show me because it happened so fast, they aren't giving these letters. So this is what the letter said that finally went out to the broker partners the day after I came out with the story. Thank you again to my awesome insiders. This is what it said. All broker submissions received after these dates. Oh, sorry, here, hold on. I started a little too low. Citizen said the contract has been terminated according to the terms of the agreement after the close of business on Wednesday. Another letter reviewed mentioned the date of December 6th. All broker submissions received after these dates will not be processed, the letters state. The bank added that it will continue to service all existing mortgages in accordance with existing processes. Kevin Leibowitz, CEO of Grayton Mortgage, said his brokerage had signed up with Citizens in anticipation of them opening up in New York. He said, I was looking forward to having a new outlet for jumbos and arms. Jumbo loans being a certain high. Okay, anyway, you guys all know that. That's basic. But that didn't come to fruition, Leibowitz said. A Citizens employee told Housing Wire that leadership announced the shutdown of the wholesale division during a meeting on Tuesday morning. The meeting lasted a few minutes and there was no room for questions, the source said. You want to know why? Because all the questions like, do we still have a job? They don't want to answer that because they're going to be in the middle of firing people. See, because things are going bad for the bank. This is how when you see layoffs, when you see them stop selling a certain product, which means revenue's coming in, it's going bad. Look, I'm going to leave you with this. We've gone long enough. Thank you to everybody. Hit the thumbs up. It's happening. There's another bank that's going down. Mortgages are in trouble. There's a federal inquiry or investigation going on. If you guys want to know how to get ready for this, if you want the edge before all this goes down, you want to know how to take actionable steps right now to get ready and how to identify these cycles, $199, 80% off after the first year. It's going up a lot because, to be honest with you, the information just gets more and more valuable as the ninja keeps getting proven more and more right. All right, with that being said, the economic ninja, it's not me. Real estate ninja is out.